Good evening, wherever you are in the world today. I hope you're absolutely amazing. All right, so this is part two for the 28th of August. We're going to get into the forecast, as I promised in my previous video, for the new direction. All right, so if ever you're lost, follow a structure. Okay, I've got the MTOPS structure, which is a play-by-play checklist to ensure that we've got everything we need. Now, typically, when I'm trading for myself, I wouldn't necessarily do anything with this for now. All right. The reason being is because this is when I watch for a confirmed turning point. All right. So there are some signs here, and I want to see if you can see them too. Let me switch the microphone. You guys take the microphone for a second. All right. Can you see why this could be a confirmed low? What are the elements that are visible and obvious to suggest that this is a confirmed low and that price is going to continue going up? Now, there's no guarantee that it's going up. So just bear in mind there is still an option that this could be correcting and then continuing down, and we need to then adjust this initial setup, or alternatively, it being a confirmed turning point and going up. So I'm going to give you 10 seconds to think about it, and then I'm going to go through it myself. Okay, time is up. All right, so again, it's best to have a structure because the day is long, the brain gets tired, the back gets sore from sitting at the desk and doing charting and analysis and trading and hoping and all that kind of stuff. So um, it's good to have a checklist, a structure, a step-by-step, something that you can follow. All right, so here's mine. It's called MTOPS, market structure, time forecast, oscillated price forecast, support and resistance are my checks for every single turning point. Okay, so starting from the top, the market structure tells me that the beginning of the cycle is there, the end of the cycle is there. We've got our structure up front. I've discussed it in the previous video. And now we've got the rest of the cycle that needs to build out. All right. So every market cycle has got a certain rule or a list of rules that it needs to abide by. All right. And one of them is that turning point 6, or the third low for the cycle, will form in the third quadrant. All right. So should this be turning point 6, it's pretty much in the right spot. Okay. So as I'm speaking, I see this candle trying to push down. And for those reasons, I'm not totally convinced that this is a confirmed turning point. So therefore, again, I'm just going to be watching the price action personally before taking any action and then moving forward. So today we're going to just do a pretend confirmation that the turning point is in, just to show you what it'll look like to the upside. And then should this price continue to break down, then I'm going to just simply reconfigure the scan tool to be a little bit bigger, as it's already bled out of the GAN tool, which could be a sign that it needs to continue in terms of the space required for its final move. All right, so this is just practiced, is what I'm trying to say. So the market structure suggests that turning point 6 is in the right region. All right. The time forecast we've already covered, and that's the reason why the target zone exists, is that this is the range in which the target could form within, and it got there. Almost, I mean, there's the low over there. Should it be the low? Almost to the T, right? Given 1 or 2 bars across, that's where the low formed. So what that tells me now is that should this break past this low, which is lower than that low, then we've got a downtrend confirmed. Okay? It's in its best interest to keep itself above this low so that we don't have a slide out and a confused market. Not for now, at least. Reason being, once again, is because from a market structure perspective, we have all the space that the market needs to fill up correctly. Okay, so I'm really am watching this candle, and I'm getting the feeling that the market's going to continue down. I wish I wasn't so distracted by market activity. Call it a bad habit. All right, so time forecast once again. Should this be the low? It happened a bar after my initial forecast, which was brilliant. And I said it was going to be quite tight for all the reasons mentioned in the previous video. The oscillator hasn't switched just yet. So if in your 10 seconds you said that the oscillator is a factor, you're correct. All right, but the oscillator over here sometimes looks as if it's going to switch. It gets close and then opens out again. And that's another reason why you can't trust oscillators as your trading strategy, because they're not reliable. They simply just tell a story of what has happened in the past, and not always the best story at that. Okay, so it's just a kind of sidekick tool that we use as a bit of extra information. But in terms of weights and biases, that's just code talk. Sorry, I'm very involved with code right now. Weighted against the other components, it's got a very low scoring. It's not a strong it's not a very strong player in the overall strategy. And this is the reason why. So if price goes down and guys have opened up a long position over here because it looked as if it was going to switch and they were impatient and they didn't wait for it to switch, then they're going to see a loss coming in. So the market rewards and the market punishes. And misusing a oscillator will get your trades punished. Okay, so that hasn't switched just yet. In terms of price forecast, we can switch this around. However, I do see the current level sitting at arc 5 of our previous forecast and support and resistance we've covered in the previous video. So if you got any of what I just said in the 10 seconds of how to confirm that this is a potential confirmed turning point, then congratulations. If not, again, reach out to me. I've got a course. You can learn to do what I do. For practice, and I'm a little bit hesitant to do this. I'm not sure if you can duplicate charts, but for practice, and again, I just need to say that this is not a confirmed turning point until the certain elements have confirmed it as a turning point. But for practice, there's so many haters in the world, so I was going to make sure I'm very clear on things. Otherwise, I get bamboozled by all these keyboard warriors who are taking a break after their online gaming and then just want to troll other people who are doing good things out in the world. Anyway, all right, so we've got this naked price action now. All right, so for practice, let's put this down as a turning point. Okay, something that I suppose I wanted to show you before I did that was just the shape in which this was forming. All right, maybe I should zoom in for those on mobile. So the way that the shape was forming over here is one of the indications I look for in terms of just the naked eye approach as to what is going to transpire after this. All right, so we got that, and those candles forming in a linear progression rather. That means a line form upwards. In this instance, it's a diagonal because price moves into a diagonal support, not horizontal, as I made mention to in the previous video. So that's just something in your 10 seconds. If you got that right, then congratulations, you're on the money. So to show you in a separate example, if we put down a line there, for example, you'll see that it's also kind of like a linear regression. So a line diagonally going down. Okay, so that's what my naked eye looks for. I'm now going to just put this, recycle this trend line and just put it down there as just a hypothetical low. And why it's hypothetical is because I don't act on these market moves. I'm repeating myself because these are the points I need to really go drill home, I suppose. I normally wait for the confirmation. Okay, so it's hypothetical low for now. Then what we're going to do is build out our prediction. And I'm not going to make it too large for the time being. Reason for that is I don't necessarily see price action breaking ahead of that high for now. So I think overall we're in a downtrend, but in my kind of premature analysis, again, because I watch, I don't act before I need to, this will be a move to build the next low down. Going back to our structure, sorry. The benefit of having an office at home is that you're not going to work. You don't have hours of traffic that you have to fight back and forth. However, and also you get to spend time with the kids and your dogs and, live that wholesome life. The non-benefits of that is that when your dogs sleep in the office, they tend to fart. And I just had one of my Labrador retrievers let one rip. So there's pros and cons to everything. Okay, so market structure, we got a 6 potentially in. It didn't break that low, so theoretically we're still in an uptrend, which isn't too good of a case, because if price is going to go in a downtrend, we should see it regress below that low. But again, for practice, let's put this in and suggest that we're looking for a turning point 7. So I'm going to take, for my time forecast, the probability of it happening before there, just based on the space we still have for the rest of the cycle. If it happens too soon, then it's not good for the cycle overall. So even as I put this down here, I do think that this has a potential of going down, because even where 6 is formed so early in, there is a lot of space to cover for the other turning points, and that's not ideal for, again, the bigger picture. But again, practice. I don't necessarily see from a price forecast that we're going, and a market structure perspective, I don't see it getting above there. So I'm going to just take that off the board, or maybe I can just be a bit more lenient and just line that up with that threshold over there. So this becomes the area of probability. And then where price is already formed, it obviously needs to form above there if we're looking for a high. So then I'm going to block that out as well. So how I get to my target zones is I first rule out the areas of non-probability, and then what's left becomes my target zone of high probability. So just like a football striker, I'm talking about soccer. When Lionel Messi or one of your favorite football players are charging for the goals, they're deleting all of the area in which the ball should not go. And what is left, of course, is the target. And they need to strike that ball into the area of where the goals are at. So in their brain, being deletion creatures, they discounting all the areas of where price should, or the ball should not go. And we're doing the same thing here. So we know that if the price is pushing really hard to continue down, it's not going to necessarily form a higher high. So therefore, the scale of my GAN tool is not going to supersede this threshold over here. Okay? Then, because of the overall cycle, I don't necessarily see the turning point happening in a tight format. So I'm going to take it to a certain threshold and a certain level, and you can learn how to do that if you want to learn the MTOPS way. And of course, where price is already formed, it's not going to form underneath there. Otherwise, that becomes the high. So this becomes the target zone. Now, if I zoom out and look at the cycle as a whole, do I necessarily see turning point 7 form over here? It's not impossible. I just think, and it's a little bit unlikely, I think that this has got to go a little further to break that low over there, to form itself into a better anchor point, so that the structure and build to 7 is better built. This is a bit of a weak setup, in my opinion. I'm going to say it again. I know I repeat myself, but certain things just need to repetition is the mother of skills. So if you hear a number of things a number of times, that's because it's the kind of thing that needs to be written down or remembered. And that is, when it's early in to a turning point as such, I watch. I want to see if this breaks kill zone. You'll learn about kill zone in the course. And if it doesn't, that means it's a crumbling turning point, which a lot of guys get caught out with because they're over eager and they want to make the next profit because I've just landed a decent amount of profit from the other move and so on. Then that's going to protect them against it. So do not enter a trade in the kill zone. Wait for this to have built out. Wait for the story to be established, and then at least have price breakthrough arc 1 to have confirmed turning point, and then we can consider the rest of our forecast. So again, for now, I'm not acting on this trade. I'm watching, and those are exactly the things I'm watching for. Hopefully there was a ton of information that you can go back to in this video and perhaps implement in your own day-to-day. Again, this is just a hypothetical low to a potential setup to the upside should this be the case. But again, sorry for saying again and again and again, but the oscillator is not switched, and we got price re-entering the kill zone, which isn't a strong indicator that we are in just yet. So tomorrow morning we'll have more information, or tomorrow, wherever you are in the world, we'll have more information on that, and then I'll update the setup. All right, so I hope this one's been informative. I hope you can now see how the decision-making process to the predictions onto Thumbsuck. This is legit forecasting with tons of reasoning as to why and how the market does what it does, and also the power of patience to sit back when the market isn't performing in a obvious manner, and to responsibly wait until there's enough confirmation signs for a next solid prediction to be made. All right, so that's it for today, and I'll catch you in the next one. Ciao for now.